This is probably the most important data drop of the week. It is the Fed's favoured inflation indicator, the core PCE price index. We've seen other inflation numbers come out in the last couple of weeks. PPI and CPI both came in stronger than expected. That's lifted US yields. That's lifted expectations of rate hikes from the Fed. The rhetoric we've heard from Fed officials over the last couple of weeks has certainly been turning more hawkish. Hello and welcome to ATFX's US core PCE price index preview. This is probably the most important data drop of the week. As we know, it is the Fed's favoured inflation indicator, and it has been creeping up over the last few releases, and it's really pushed back those Fed rate cut expectations. And even now, we've got a lot of the market that are even looking for the next move to be a hike, and even followed by another hike as well, because, of course, of what we've got going on at the moment in the Middle East. So even though we're talking about fundamental data, we cannot ignore what's going on in the rest of the market. Geopolitics are dictating moves that we've seen over the last few months, ever since the conflict started in the Middle East. Things are starting to look a little bit better in the Middle East. We're starting to hear good rhetoric from both the Iranian and the US side of things. They're looking to reopen the Strait of Hormuz. Negotiations are ongoing, and the market's certainly reacting as if this time we will get a solid response. A deal of some kind will be done, and we will start to see that strait opened. It controls a fifth of the world's supply of oil, and that's why we've seen inflationary concerns go through the roof over the last few months. And that's why it's so important for us to see if this data backs up how the market's been pricing things. Everyone's been watching US yields. They've gone through the roof, as we know. Expectations for that Fed rate cut, as I said, have fallen off. The rhetoric we've heard from Fed officials over the last couple of weeks has certainly been turning more hawkish. So how do we trade this? We're going to look at a few different products today. We're going to have a look at gold, which has been trading massively in line with the US dollar for the last few months. So it is an excellent trading opportunity on this data when it comes to it. We're going to look at euro dollar, obviously the biggest traded currency in the world. We're going to look at dollar yen, sticky situation with that, and I'll get into it later. I'm even going to have a quick look at dollar Swiss as well, because if we do see rate expectations moving up for the US, Swiss is back down to zero. It could be a big mover, and technically it could be a very nice mover as well. We'll have a look at that in a middle. So to the data, as I said, we've seen other inflation numbers come out in the last couple of weeks. PPI and CPI both came in stronger than expected. That's lifted US yields. That's lifted expectations of rate hikes from the Fed. Now, if that gets locked in by this data, then we could see some big moves in the market, and especially with regard to the dollar, especially because we've seen them kind of range bound recently. So we could see some big breaks and obviously opportunities for some massive profits. So what are we expecting from core PCE? So the month on month, it's a bit boring. It's been plus 0.3% month on month for as long as I can remember. We had a little bit of a 0.2 in there a few months ago, but any differentiation from that, if we get a 0.4, if we get a 0.2, expect the dollar to move. The big one has been the year-on-year number that has crept up from 3 up to 3.2, and now we might even be expecting 3.3%. This is locking in those rate hike expectations, if I'm honest with you. Fed wants it down at 2%. It's not moving there anytime quickly. And obviously what we've seen over the last few months, inflationary pressures across the globe and of course in the US have lifted those. So if we get that 3.3, if we get 3.4, it's probably off to the races with the dollar. The headline one is the month on month. If we get a 0.4 or a 0.5, certainly off to the races. A pullback could really throw the cat amongst the pigeons really on how the market is expecting things to come out. And we could see a sharp pullback in the dollar. And that could go in line with peace hopes coming to fruition in the Middle East. So there we go. Without any further ado, I'll take you over to a couple of charts. Here we are with the daily chart for gold. Most of you that have been tuning in will be more than familiar with this. Looking at gold, as I said before, it has been moving firmly in line with the US dollar, not with its haven properties over the last few months, ever since this conflict started, really. And obviously, we had these huge moves early in the year. I think that's part of it. So it has moved down strongly with the higher dollar over the last few months. There's those highs up at 5,400. We're now down about 45.35. Been a little bit of a move today, actually, and this contravenes some of the stuff I said earlier. News of strikes from the US into Iran. There's still a little bit going on there, and drop back down. But as you can see, fairly range bound at the moment. So if we're hitting around these levels, we've got good technical levels to trade off from both sides. So stronger number, which you can probably tell I'm leaning to, as is most of the market, due to these inflationary concerns. It will challenge these. So a plus 0.4 month on month, a plus 3.3 or 3.4 year on year, it will challenge this support just under 4,500, 44.90 there on the trend line, low at 44.52. A clean break should take us down to this 200-day moving average, around about 43.80 something, and then that trend line support around about 43. So a bit of congestion because of the moves we've seen up, but that could be the move that breaks. Now, top side, if we do get a surprise, and this is probably the bigger risk side of it, numbers come in weaker than expected, a 0.2, a 0.1 on the month to month, or a 3.1 on the year on year, we should see this challenge come very quickly up to this 46 kind of 50 level. A break here takes us to have a look at those May highs up around 47.75, and a break there, and that would come with a really weak number, takes us all the way back up to these levels. So plenty of trading opportunities in the gold. I'm going to go and have a look at some of the currencies now. We'll kick off with the world's biggest traded currency pair, Euro US. So here's the Euro on the daily chart. As you can see, a nice move up here that we had from those lows back in April, but we've come back down recently as dollar strength has increased along with those US yields. We're now sitting not too far away from these good long-term support lines, coming in just under 116 the figure. As you can see, been pretty quiet this week. A lot of markets being closed. Expect some moves prior to this number, but these levels will probably stay in shape ahead of it. Weaker number should see the euro take off to the top side. Resistance in around 117.50. I was doing this last week. It was up at 118. A break there should challenge 118. Then we're looking for moves back up towards that 118.50, and then sky's the limit. As I said, that's probably the surprise. Stronger number. 0.4, 0.5 should see a break of this trend line, should see a break of these lows down just underneath 116 the figure. Then we're opening the way down for moves here to around about this 114 level. That's kind of the way I'm leaning, if I'm honest. Euro, excellent trading opportunity because we're getting squeezed on these technicals. So excellent potential for trades. Now, going to move over to dollar yen, which could get really tasty if we get some big numbers. So here's the dollar yen chart on the daily. As we know, has been horrendously volatile due to a small player in the market known as the Bank of Japan, dictated by the Ministry of Finance. So yeah, Japanese authorities. We know they've come in. This is the last one we saw at the end of April. Bang, took it down 2.5%, really. We found some support, and here's another hit that they gave us around about these levels, and fundamentals have been exerting themselves. Higher US yields, inflationary pressures have pushed us back. But the last week or so, we've been in relatively tame trading conditions. Some are thinking that the Bank of Japan is throwing a bit of a line in the sand. When you look on some of the more tighter charts, it does look like they could be. They don't want to see it back up here. But if we do get a stronger number on Thursday, that 0.5, 0.4, 3.3, 3.4 on the year, it should fill in this gap quite nicely. That could be the initial trade. Trade it very sharply because we could see the Bank of Japan come in. You could end up seeing some really nasty whipsaw moves. It moves higher on the data, gets smacked, I should say, by the Bank of Japan. So we could see a lot of volatility in these. Fundamentals should still take us to the top side. That's the trickiest trade out there, but it could also be one of the most profitable for people out there. I'm just going to throw in one last one. We normally only do a couple of products, but I'm going to throw in dollar Swiss because it's looking quite interesting from a technical perspective. Here's that dollar Swiss on the daily, and this is the one that I think could actually really move if we get the stronger number. Once again, been fairly range bound. Lows here, just around 77.60. Highs here around about 78.30. So relatively tight ranges for the last couple of months, really. So constricted into this dollar Swiss move. A stronger top side, that 0.4, 0.5 should see a break of these levels here. these highs, it will should take us back up towards 80, could take us higher. Obviously, the weaker numbers should see a move back down towards these levels, just under 77. And a breakdown here opens up the way for further downside. Once again, it's going to be very interesting. A lot of moves on these numbers, great trading opportunities. And as always, if you need anything from us at ATFX, please do let us know. Thanks for tuning in and good luck with your trading.